Welcome back. You're watching Buy or Sell. Today's Tuesday, and as always on Tuesdays, we try to take up all your mutual fund queries. And we have Anil Rego joining us all the way from Bangalore. He's CEO and founder of Right Horizons. Thank you so much, Anil, for joining us. We have the first question coming, and this comes from the investor who has sent us an email. He says, I plan to start an SIP. Please help me choose between Sundaram Select Mid Cap and Sundaram Smile Fund. Tell us, Anil, what should you advise the investor here?
Sure. I think both are relatively mid-cap funds. So one is the investor should have the risk appetite to invest in a mid-cap fund. Now, the Smile also has a component of small caps there. So it's a small and mid-cap fund. So, for if one is willing to take a higher level of risk, then you could use a Smile. A Smile may also require you to be a little more active on the markets, because in case of a fall, then the fall can be sharp. So whenever markets are doing well, one should book profits. So select mid cap is can be for somebody who's looking at a slightly passive type of investment style. So I would leave it to the investor as to which style he would like to choose, and accordingly both are good funds. So you can choose one of them depending on the risk appetite.
Okay, Anil, so if I can recap what you just said, Sundaram Smile and Sundaram Select Midcap are both good funds, but Smile is likely to be volatile. So if you're a passive investor, perhaps your first choice should be Sundaram Select Midcap. Let's go on to our next query, which is again, choice between funds. This investor is 21 years old, looking to invest in a mutual fund, and says, what's a good option? The three that this investor has presented are Reliance Mutual Fund, UTI Mutual Fund, and Axis Mutual Fund. So essentially looking for some advice there, Anil, for a first-timer, somebody who's just starting off on the mutual fund investment route.
Sure. I think among the fund houses, I would prefer Reliance. They have a much larger set of funds there, and I think ones with very good track record. In fact, I would also suggest maybe one considers HDFC, because HDFC, maybe you can use the HDFC Top 200, for example, along with Reliance, RSF, maybe something an investor can start off with. Okay, so I would still suggest one, being a fresh investor, start off with an SIP. Not necessarily put in lump sum, because you may not be very good at timing the markets right now. So start off with an SIP, break it up into two of these funds, and I think that will do you well.
Okay, that's one of the questions. Another one comes, and this one comes from Rajesh Agrawal, and he says, my fixed deposit is maturing. He has a fixed deposit of 2.5 lakh rupees. It's maturing this month. How can I invest for 1 year and reap maximum benefits? And he wants to you to recommend a good tax-saving mutual fund, schemes that are capable of generating high returns.
Sure. First of all, you're looking at a bank FD, which is a very conservative avenue. It's a safe avenue. So if you want to put it into a debt and avenue itself, maybe you can continue with the fixed maturity plans. You will have a lot of fixed maturity plans with about 13-month maturity there. They're also tax efficient, so that may be a good option to use. There will be quite a lot of NFOs which will keep coming out of fixed maturity plans in this period, so you can use any one of them. You can also use a fund like Reliance RSF Debt. Okay, that is something which is almost works like an open-ended fixed maturity plan type of option there. If one wants to take some risk, then you can probably use a balanced fund like Templeton has a variable flexible PE fund, okay, which depending on the PE ratio, it will keep varying the amount of debt and equity there. So that may be one option that you can use if you want to take some bit of balance risk. On the tax saving funds, I think you can use like ICICI has a tax plan, Canada Robeco has a equity tax saver plan. So I think you could break up between these two funds and maybe put equal sums of money. I think both of them should do well for you.
Anil, how does one look at options for buying or getting in or getting out of mutual funds at a time when a budget is around the corner? Will this give an opportunity for an average investor? I asked this in this context, of the context of this question, because he's having a large sum of money which he may want to invest now.
Sure. I think for a lay investor, it's too risky a move to take. Post budgets, you could see a huge volatility on both sides. So I would not maybe put money lump sum there. Even if I had it lump sum, I would park it maybe in a debt fund, and then liquid debt fund like a floating rate fund or some liquid plus fund, and then do a systematic transfer into an equity. I may do it very aggressively, maybe even just over 3 months on a weekly basis, everything moves into equity. But I don't think this is a time when you should be putting lump sum there, because if markets just tank, then you're going to be sorry with that.
One final question. A 51-year-old says, I've been investing through this systematic investment plan route in a number of schemes, Tata Infra Fund, SBI Magnum Tax Gain 93, Reliance Regular Saving Equity Growth. There's a whole bunch of them. This investor wants to make fresh investments in mutual funds. So essentially, Anil, he's asking for your top picks.
Sure. I think something like an ICICI Discovery Fund is a mid-cap fund that one could look at. You could even look at some of the HDFC, equity fund, which is a larger cap fund, to have some balance between large cap and mid caps there. So maybe these are the two additions that the investor could probably make on his portfolio there.
Anil, as always, thanks very much for making the time. We'll see if the budget does anything to deter or encourage mutual fund investors, and we'll touch base with you once that roadmap is clear. Thanks once again for being on NDTV Profit. We're all out of time on buy or sell, but Profit Newsroom will be taking over from here.
Just to tell you, we're still up about 40 points for the Sensex. Nifty's pruned its gains to 13 points. We'll track that for you as well when Newsroom comes up in a bit.